All right, welcome to The Explainer. Today, we're diving into something that has totally flipped the script on how new ideas get funded: crowdfunding. So, how exactly did the power to launch a dream project shift from stuffy bank offices to, well, all of us? Let's get into it.
So let's start with a question for you. Have you ever had that light bulb moment? You know, that incredible game-changing idea for a product, a movie, a business, anything?
You've got the vision, right? The passion, the whole plan laid out, but you're missing that one kind of crucial ingredient: the money. Trust me, you are not alone. It's the classic roadblock for innovators everywhere.
But what if there was another way? Well, that other way is all about bypassing the traditional gatekeepers. You know, the banks, the venture capitalists, and going straight to the people. It's a model that's built on collective belief, and we call it crowdfunding. So what is it exactly? Well, at its core, crowdfunding is actually pretty simple. It uses social media and these awesome online platforms to connect creators directly with a huge network of potential backers. It's all about gathering small amounts of money from a large crowd to bring a big idea to life.
And while it feels super modern, the basic idea has been kicking around for a while. You could say it started back in '97 when a British rock band just asked their fans to chip in for a tour. Then came the first real platforms, and then, in 2009, Kickstarter showed up and blew the whole thing wide open for all kinds of creative projects.
But here's the thing, crowdfunding isn't a one-size-fits-all deal. Nope. Depending on your project, the kind of relationship you want with your backers can look really different, and pretty much breaks down into four main types. Okay, so these four types are all about what the backer gets in return for their cash. The simplest is donation-based. Think charities, where you give just for the satisfaction of supporting a cause. Then you've got reward-based, which is the engine behind platforms like Kickstarter. You back a project and get a thing for it, like the product itself. Moving into more serious business, there's equity, where your backers actually become part owners of your company. And finally, you have debt, where people are basically giving you a loan that you pay back with interest. So it sounds like the perfect system, right? A truly democratic way to fund your dreams. But it's not quite that simple. For all of its massive potential, crowdfunding comes with its own set of very real challenges. Let's look at the trade-offs. The upside is amazing. You get access to capital, and you get proof that people actually want your thing before you even build it. But the downside? It's just as steep. Running a campaign is a full-time job in a ridiculously competitive space. And hey, by putting your idea out there for the world to see, you risk someone else stealing it. It's the definition of high risk, high reward. But when it works, oh man, it can be absolutely world-changing. The impact of crowdfunding goes way beyond just small passion projects. It has launched global phenomenons. Let's look at a couple of huge examples.
Remember the whole virtual reality explosion? Well, it was kicked into high gear by this tiny startup called Oculus VR. Long before it was a tech giant owned by Meta, it was just a dream on Kickstarter. This right here is what validated demand looks like. Their goal was $250,000. The crowd gave them nearly 10 times that, $2.4 million. That public vote of confidence led directly to a $2 billion acquisition by Meta just 2 years later. I mean, that's just a staggering trajectory.
And it's not just about cool tech gadgets. Let's switch gears and look at a platform that shows the sheer scale and social impact of this model. GoFundMe has become the place for personal causes, everything from medical bills to disaster relief.
The scale here it's almost hard to wrap your head around. We're talking over 200 million individual donations adding up to more than $25 billion. That isn't institutional money. It's a massive flow of capital powered entirely by people helping other people. That's the power of the crowd in its absolute purest form.
So, when you see numbers like that, it really makes you wonder, is this successful campaign just about raising cash? Or is it actually proof of something more, a sign that an idea is truly viable out in the real world?
This is exactly why crowdfunding is so often called the ultimate market test. You're not just asking for money, you're asking thousands of potential customers, hey, would you actually buy this? And a successful campaign gives you the clearest possible answer to that question.
That kind of data is just priceless.
But of course, there's a really compelling counter-argument. Sometimes, a campaign can go viral based on pure hype and a slick video, not on whether the product is actually any good. That viral enthusiasm can create a bubble that totally masks real-world problems with, manufacturing, shipping, or the product itself.
And that leaves us with the big question at the heart of it all. Is crowdfunding the ultimate market test, proving an idea's worth with real dollars? Or is it just the ultimate popularity contest, where the best story wins, regardless of the substance behind it?